Nirav, and before we proceed, I'm just checking out the audio and seeing if thing is working fine at my end. Hello, Robert. It looks like somebody is already live there. And yes, of course, those of you who are listening to me live can always let me know in the chat if there is an issue, but it looks like things are working fine. So I'll just make one more quick check. Yes, it looks like we are live as on YouTube as well as LinkedIn. So in that case, let's not waste any further time and get ahead with our actual content. So guys, before we proceed with anything at all, and thank you, Robert, for letting us know. I'll just get done with the legalities with the quick disclaimer on screen. With the legalities out of the way, let's now quickly head over and let me give you a very quick introduction. So this is the 108th edition of the Trading Opportunities webinar, and we conduct these webinars every Friday. What we do is discuss some of the major instruments traded all over the world: gold, crude oil, S&P's 500, Nifty 50, Bitcoin, as well as Euro USD currency pair, right? So if you are attending it live, we go. I mean, if you are attending it live for the first time, we go live on every Friday at 2 p.m. GMT or 7:30 p.m. IST. So you can just convert it to whichever time zone you are in accordingly, right? And we only take questions regarding our discussions from the live chat. So in case you are interested in talking anything out or asking anything related to what we are discussing, of course, right? Not keep in mind, we do not take views from the audience. That is, I'm not running a sort of a class here. The discussion is only based on the analysis which I push in front of you guys, just to be clear, right? And with that being said, we have so far in the 107 discussions figured out 248 trades. All were discussed live in front of you in live market conditions. Of course, today is different. Today is a holiday, so but I did not want to break the routine. So from the last webinar, 107th webinar, 3 setups that we discussed in the webinar have actually worked out, right? And we will discuss all of those as we go along in the webinar. You can also go ahead and go to 50 Eyes Market Analysis YouTube channel, hit on the live section, and then check the webinar yourselves if you want to get things in detail or a detailed perspective of things. Right. That being said, let's now move forward. I'm also the author of the book Think with the Markets, which is available on Amazon via its Kindle electronic delivery platform. You can just check it out later at your convenience, and also instructor of one of the courses on Elliott Wave, which is Elliott Wave, the complete guide to professional trading with Elliott Wave, available via my website. You can just check it here, which has 1,600 plus students at this point in time. Right. And lastly, the most important part, I have kept a track record of all the analysis which I've been conducting over the years since 2016. As you can see, all the live videos posted as well as live webinars conducted, we have a track record of 80% plus accuracy over the years. All of it is publicly verifiable, and of course, it beats industry standards where the level of 60% is considered very high. This is an much higher level, right? So our accuracy goes as high as you can see here, 90 plus. Now, since 2022, we started conducting these trading opportunities webinar, which are weekly. So I have not kept a track record of that. I don't have the time to do a compilation of 100 plus things, but we have a tally. As I said, we have captured. This should be edited out to 248 now in last 107. Right. So that's about it for my past work and things if you want to check out. And now heading over to our current discussion, we will be going over the sequence. Let me just show that on the website. So this will be the sequence of our discussion. First of all, we'll discuss EURUSD, followed by crude oil, followed by gold, Nifty, S&P 500, Nifty 50, and then Bitcoin. And every time a discussion is completed, you can use the live chat section if you have any doubt regarding what we have discussed, right? So that will be our way to move forward with the webinar. With that being said, let's now head over and this is the chart of Euro USD. And what we have here is, one second. What we have here is a continuation of the discussion or the analysis which we discussed in the last webinar, literally as it is. So before moving forward with this discussion, let me just very quickly show you. And thank you, Robert, for confirming your presence here and letting us know that audio and everything is working fine. As always, guys, if you are live here with me right now, you can always say hi. That's the whole point of running live webinars. So one second, let me just enable one more thing here before we proceed. Yes. So as I was saying, we will just look at the last recording first before proceeding for further with our discussion. So here is the recording from the last webinar over here, and this is the 107th webinar. As you can see here, we are currently at the chart of euro, and the discussion basically was that some minor downside is remaining, after that a corrective structure to the upside, and then another leg down. Basically what we are expecting is a triangle kind of progression, basically a sideways kind of progression. And the time of discussion, let's just check, the price was 1.0, 1.08 to 61. Let's note it down. Now the idea was, if you can check the whole thing, I'm just showing you at a point where the main theme was discussed. So if you check the whole thing, you will figure out that the main idea was that we were expecting some downside here from 1.08 to 61 for the completion of wave D, then some minor upside for E, and then a leg down. So what we have so far is, as expected, this is 22nd March is somewhere here. Yes, somewhere here. So 1.08 to 61. Let's mark it here on the chart. Yes, somewhere here. There it is. So this is roughly where we were when we discussed the last webinar, made the discussion in the last webinar. Since the market did go down and I was actually in this trade, it was posted live on our Slack. Where's that? Where's that? There it is. Entered shorts, booked 80%, closed all. This was posted yesterday. So again, getting back to our discussion, this has moved as per our analysis, which was discussed in the last webinar. And not only that, what I am expecting is a little bit of upside movement here actually at this point in time. Now, it is in accordance with our analysis. Hello, Sushil. I wasn't expecting you live. I thought you were out today. Right. So basically, coming back to our discussion, what I was saying was that we are expecting a triangle kind of progression here, right? So this is the last webinar's discussion. So D looks complete, and then E wave now should come into play, right? And if the E wave really is going to come into play, then we are going to see a corrective kind of a move. We do not expect the wave E to be very big, right? We expect the last leg, which is the E wave, to be generally very fast and having a big spike kind of a thing, right? So it's not generally the ideal place to put a long trade. Definitely not an ideal place to put a long trade. So the basic theme remains that once we see a correction, if our analysis is correct, then we want to see a breakdown or a downside move, which will take out the last low. Currently, the last low is at what is this level? 1.07680. Now, keep in mind, wave D may have some minor leg down remaining. We don't have the exact criteria for it. I was short for a very small time. It was a very short term kind of a trade, and I'm already out with the profits. So I'm not holding any positions, and the bias remains to wait and watch for this corrective leg for the E wave, right? And once this E wave is complete, we only want to go short near the break of the last low, right? So keep in mind, right now the low is 1.07680, but it may change and we need to keep that in mind or be mindful of that basically. So nothing else much to add. If you guys have any doubts on what we have discussed so far, you can just post that in the chat. Otherwise, I'll move on to the next chart, which will be the chart of crude oil. And this webinar will have some very interesting discussions specifically on gold and S&P. Probably should have used that in the title, but that's how these things are. I have to pre-plan them, and they don't always have the best of titles. So let's go and check the chart of CL. Once again, as always, I'll just like to go and check what was being discussed in the last webinar on CL. So here is the recording from the last webinar. And let's see where we were discussing crude oil, around somewhere here. Right. So the main theme which we discussed in the last webinar was that we were expecting a WXY kind of correction, and specifically we were expecting one leg down in this market after the completion of what do you call the wave X, and we were expecting that this X is probably complete, and the reason for expecting that was the strong movement down. Right. So that was our hypothesis one, or the main count, and the short entry was below the low or the break of low for conservative traders. Alternate view was, let me see if it plays out in the video. So there was an H2 alternate view. Let's see if we discuss that in detail or what. So there's a small glimpse, as you can see here, of the alternate view. We are basically suggesting that the wave Y is already, let me just go back. Yeah. So this basically suggests that wave Y is already complete, and this is our H2 or less likely view, right? So this actually did play out. So I was caught on the wrong side on crude oil actually during our trading sessions, and later on realized that the things are not really working out as we had previously thought. So basically, this was a low probability scenario. So that's why I was trying to play out the higher one. Anyways, it was an evolved form of what we discussed. But interestingly, this second view has played out as what do you call very nicely on chart, and that's what we would like to see at this point in time. Instead of delving too much in the past, let's see where was 22nd March, somewhere here, and the discussions were somewhere here, whatever, right? Somewhere here we were discussing, and there, as you can see, there was no follow through to the downside, nothing like that. So, anyways, what is really going on here, right? What is really going on here is, I believe that we are seeing. I have to go to a little bit higher time frame here. Hello there. So what is really going on here is two probabilities exist here, and the first one, which is, I mean, actually we have discussed this one multiple times so far. So this is our point of reference for crude oil. The price level is around 67.9 something something, and we are experiencing a wave A up, B down, and then a C up. Right. So this is the A up correction, B down, and now that's the interesting part. The C up has two possibilities. Let's call the hypothesis 2 as a diagonal progression, in which case we have wave 1 of the C, let's call it dot 1, 2, 3, and 4, and 5, right? Now, if this really is a diagonal progression, then that means we are most likely in the last leg of the whole structure. And that is worth noting, because if really is a diagonal and this is the last leg, then after which we know what's going to come, a fall, right? So that's hypothesis 2, or let's call it H2 on the side, which is suggesting that there is minor lag to the upside and then a major down move is likely, right? That's our hypothesis 2. And hypothesis 1, as we have already discussed so many times, is more or less the same. We are expecting a series of impulses. Let me just get rid of this part to make these things more clearer on the chart. So there is the hypothesis two. We are expecting that we are in a series of a nested impulse, and I have too much on the chart, so I'll just draw it out here. Let's call it as H1 actually in yellow, and we are assuming that this is the one up, this is the two down, and another, let's say, lower degree one, and then a lower degree two is being expected, which will then be followed by a three, because the two can be completed here, counted complete here, or maybe sideways continuation as a flat. But whatever the case is, we expect more upside here, straight off upside or some sideways and then upside. So that's our H1 or hypothesis one. Right now, there's a kind of a controversial, not controversial, I would say, cautious position here, because while both of these analyses have some commonality, right? Specifically, H2 also is suggesting some upward movement, and H1 is suggesting a lot of upward movement. So this will give us some short-term plays or scalp plays, right? But that requires a certain level of expertise. Not everybody can take them, even if you can see them. So that remains there, right? If you are able to do the analysis at your end, short-term wise, and see these plays in live market, then these are the plays I'll be looking for as per H1 and H2 confluence. Short-term upside movement, right? This small upside movement, right? And if it blows up to the upside and relegates over diagonal count, then that means the market is moving as per H1, and then the wave 3 will show its true color, or should show its true color, and give us a good enough momentum upside, right? So that's about it for crude oil short term upside movement, keeping in mind the cautious approach, because we have a possible diagonal in play, or can have a possible diagonal in play. And short term wise, very short term wise, the resistance is 84.656, and after that it goes to, I don't think we should consider that. I don't know from where I have taken that. So very short term wise, we have a resistance pegged at 84.626. But cautious approach, keeping in mind the diagonal thing. Minor short term wise long plays. Nothing much to add here. I think we have given quite a lot of time to crude oil discussion. Let's move to gold now, where things have actually played out precisely as per our analysis in the last webinar. But more importantly, in gold, what I'm seeing here is a thing we need to be cautious about. Cautionary tale, as we call it. So we will discuss that and why I think it is of much importance. So before that, I'll just quickly load up the last discussion on gold, and we were discussing gold somewhere here. I think, let's see here. So this was the analysis in the last webinar. We were expecting that there is going to be a wave 4 correction. Primary wise was that it will possibly be a zigzag correction, which can go to 21 30-ish level, whatever this was, this 38.2 line was. Secondary analysis was with this yellow box. As you can see, the yellow box was suggesting that the market can go sideways and then up, which actually did play out. But both of them were basically saying the same thing, that the market can go sideways and then up, or a little bit lower than up. But so basically it was a swing long opportunity, very clearly discussed in detail. I won't play the whole thing. It is 4 or 5 minutes long, I think. So that was the analysis. The price, I want to check the price as well, 2173. Now let's head back and see the actual chart. 22nd of March, 22nd of March is here. So this was the time when we were doing the analysis. Somewhere here 2173 is. And the idea, as I said, was the same, right? That either the market will go lower as a zigzag, or go sideways as a triangle kind of correction, and then go up. So in this particular case, we do have on a short-term time frame. So we do have the triangle in play here. Let me see if there is anything else. Yeah. So there is your triangle in play, and then this is the up leg. So pretty much precisely as per our analysis from the last webinar. Now, did we discuss some upside targets? I'm not so sure about it. Maybe we did, maybe we did not. But leaving all that aside, I am seeing a confluence of very higher time frame analysis, as well as very short term time frame analysis, as well as medium time frame analysis, all coming around 2250. So this is going to be an exceptionally important level now. I expect that something really fast can happen from here. If the market does not want to sustain above 2250, then a fast downward movement can be seen here. And if the market goes above it and sustains above it, then a strong upward movement can be seen from here. So whatever the case may be, we have to be mindful that the deciding level is very near at 2233. This is only 17 something points. You can be more precise, but roughly 17 something points we are near the important or deciding levels. And one more thing to keep in mind, these levels are not always very specific. Like I can say 2250, but that generally means 4 or 5 points above, below. So it's kind of a range instead of a level. So you get the point. It is at an important decider level, and the market can give swift up move from here if the market sustains above it, or downward movement. Both are possible. So if you are going long, just be mindful, strict stop losses. And if you are going short, then I mean the short is not yet set up, so why are you going short? Anyways, just joking. So that's our take on gold. And as far as the current position or situation is concerned, currently the market is going up. So if I was long, I would say that I would keep holding it. But currently I'm not holding anything on gold. It would be a good situation to hold and trail with something like 20 to 10 if I was having some buying from lower levels, because in these kind of situations, if the market does go there, sustains, gives a little bit of spike and then goes up, then the move can be really wild. Wave threes can have exceptionally fast moves, seconds and multiple points, and seconds and multiple points again. So it would be hard to get in the market if it really does that. But anyways, as I said, I'm not holding anything right now. So we will see if we can get something in the coming sessions. That's about it for gold. Stay extremely cautious here, because once we discuss S&P, you will know why it's becoming even more important to remain cautious on this counter. So if you have watched gold and are not interested in S&P, I would still suggest watch it, because there is some confluence going on, which I'll just discuss in a moment. And before discussing S&P, of course, we'll just take a very quick look at what was being discussed in our last webinar on S&P's 500. And let's quickly load up that recording. This is the S&P's discussion somewhere here. Let's see. So yeah, there was not much to show here. The main theme was that we were expecting that the market will go somewhere near 50 to 35 to 50 to 30 level. And once the market has gone there, we will see some sort of upward movement, right? So that was the main theme in our S&P discussion last time. And what really happened was the market did go there, and then a little bit more, some like a little bit lower than our expectation. Not very out of the ordinary thing. Let's go to the actual chart. There it is, 22, 52, 30 something is somewhere here. So yes, as I said, our expectation was only till here, roughly speaking. So it gave a, what do you call, a testing kind of move here, took out some stops, and then it is still forming a sort of a sideways movement. So what is really going on here is, this is a short term view. We expect that the market is most likely continuing in a sideways correction, right? It could be two things. It could be continuation of a four, or if the four is already complete here, then we can count this nicely as our continuation of an impulse in a nested formation, right? So if this is either of those things, it basically doesn't matter. If you consider this as one and this as two, it still is within this box range, right? And then it can go up. And if you consider this not as a one and two, but a continuation of a four, like an A, B, C, or whatever, it is still within the box range. So as I said, there is no real point in discussing where the market is going to go, right? No real point. I mean, not the market is going to, no real point discussing which count is the correct one, right? So long story short, sideways congestion continues. Pullbacks may be a good opportunity to buy. And I'm personally going to be looking for something like this to add more. I am holding some long positions on S&P right now. So let's see how they play out. But here's the thing which I was saying is a kind of a confluence thing. By the way, guys, are you able to understand me? I'm not seeing much of any activity here in the comments. There is something here. Thank you for the comment, GSP. I'm not sure what's your actual name here. So, anyways, if you guys are live, which I see most of you are, definitely make sure you are using the chat as well. Right. Anyways, continuing on with our discussion of S&P, what I was saying was no real point in discussing which count is playing out, but more importantly, see short term wise, its expectation is upside. But what I wanted to discuss was something like this. Where's that? Yeah, it's actually on daily chart, I think. So we'll just squeeze it in here. So what I am seeing here is that there is a possibility that this market can also have a strong reversal. I'm not saying it will completely fall down or there will be crash or anything. Maybe there is like, but then who knows? But what I'm seeing is a strong resistance pegged at 53.30ish level. Actually, it's around 53.24 to 30. It's a range. Now, why is it important? Because it is here. Let me mark it, then it will become extremely clear. Because it is right above our current level. Currently, we are trading around 52, 54, something. And the market is not far away from this important resistance level. And as I discussed in the gold analysis, we are very near to a highly important and multiple what do you call medium, short term, long term resistance level, and that's exactly the case here. This is not a short term resistance level. This is a confluence again of medium, short term, long term resistance level, and both of them coming in near that level at the same time means something volatile can happen, right? So if you can put two and two together, now you know why I was telling you to remain cautious in your approach. So while I'm also holding longs on S&P, I have a stop loss put in, but I also do understand that in situations like this, even the stop loss may not play out as expected because of the gaps, possible gaps, I mean. So, long story short, what I'm basically saying is that if we consider this low, which is the price level of around 3,500 point of reference, right? And from then on, if we start to count the market, then we are expecting that this one and this two can have the three ending somewhere here. May have, right? And if that is the case, then a wave 4 can come into play. And last time when the wave 4 was in play, this is what we saw, right? I would like to check how much this was so that we have a rough idea. This was a movement of approximately 10%, 486 points. So if we project 10% from the current high, let's say around 53.20 something, again, keep in mind, it's just a rough assumption. We are just trying to check the worst case scenario. Then this market can see that is pretty substantial, I would say 47.79. Even half of it is quite a big move, because the thing is, people have not seen a move or any correction whatsoever since what is this, October 2023. This market has not given any substantial correction. This is not much, and then it keeps getting lower and lower. The corrections keep getting smaller and smaller, generally a sign of strength. But then the long term and short term resistances getting into confluence is something we cannot ignore, right? And by the way, keep in mind, this is higher degree 1, higher degree 2, and then a 1, and then a 2, and a 3, and a 4. So I'm not saying the 3 is complete here. I'm just saying we have to be mindful that it may be the case because of the gold analysis. Right. So nothing much to add here. If you guys have any doubts on this one, you can just type it in the comment sections. Okay, Peter. So from Romania, nice to know. So that is all for our analysis on S&P. Just keep in mind, if you are just watching the S&P part, or just go back 5-10 minutes and check our gold discussion as well. They are both supposed to be watched together, right? And now heading on to our last two ones, which is Nifty 50 and Bitcoin. I mean, so before we head over to our last two charts, one quick full so what do you call request from you guys. Do not forget to hit the like button, and if you are new, of course, subscribe. And once the webinar is complete, even more importantly, share the content. Last time, I think you guys forgot to share, and the number of views has considerably declined. So definitely, your contribution is still required. Kindly do your part. So with that being said, let's now head over to our next chart of Nifty 50. And before considering that, I'll just like to check on what we said in the last webinar. So Peter is saying the bull run in gold has been very protected. Time for question now. Yes, Peter. Sorry, Robert. So as I was saying, we want to check what we were saying in Nifty 50 very quickly. I'll just like to go. Yes, in both cases, it kind of stands there. What we had on Nifty was around somewhere here. Let's just quickly check. So here we discussed last time Nifty, and let's see what we were saying. So I think the view was very clear, and we were expecting that the market is in an uptrend. There was a second review which was discussed, but as we mentioned, it was a second review and not the primary review. Let me delete everything on screen. Yeah. So this is the analysis from last time and discussion on Nifty 50 from the 107th webinar. So what I was saying in the webinar was that as long as the market sustains over 2188, our main view remains bullish. Right? We were expecting a series of ones and twos and basically an impulse continuing to the upward direction. And in Elliott Wave terminology, that means basically 5 waves in the upward direction. You can already see the 1 and 2. So basically 3, 4, and 5, 3, 4, and 5. You get the idea. We were expecting something like this. I'm just drawing on top of a recording. I'll just stop doing that and go to the actual chart. The price was, I'll just like to point that out, 22080. And here is the actual chart now of Nifty. Let's see 22nd March, just for the sake of context. Here is 22nd March, and this was the point. As you can see, this alert was never taken out. Basically, the market never triggered our downside or H2. So the market has actually followed our main hypothesis or H1. So this is picture perfect. As expected, the market has given a strong leg up and has gone up as per our analysis. So if you were there, you could have been able to make something out of it. At least you would have been able to see the future in making. So, anyways, that being said, what is really happening here is, I mean, if it's really bullish, then it can just continue going up. I'll just go on 4 hour just for the sake of context. If it's really bullish and super bullish, and the bull rally continues in S&P and other global indexes, then it can just continue up. And upside generally does not have barrier or a very simple barrier in bull markets. They generally do exceed your expectations. That's how bull markets generally run. And in my experience over the years of seeing them live, you won't probably even get another chance to enter it, something like that, for even longer periods of time. Right now, but as I said, we have some cautious stuff happening in S&P and gold, so there is some need for caution here as well. And why I'm not going into too much detail, I'm just give you a quick idea. If you look at the market from this point of reference, which is the price level of 16,828, price is starting around 17th March 2023. What we do have here is wave 1 up and 2 down. And those of you not much familiar with the Elliott Wave terminologies, this is how the market is expected to progress in an impulse: 1 up and 2 down and 3 up and 4 down and so on and so forth. Now, thing to note here is that 3 can be considered complete here, 4 here. That means we are probably in this leg. And if you understand from this rough, bad looking picture on the right hand side, this is going to be the last leg, if this analysis is correct. Now, one thing I like to point out again, in an exceptionally strong bull market, these things don't matter, because what will really happen is this will not be a 3, 4, or 5, but a lower degree one, let's say a dot 1, a dot 2, and then a dot 3, dot 4, dot 5, which will complete this 3, this one, circled 1 and circled 2. So in extremely strong bull markets, that is what really does happen. Is it happening here? Is it not happening here? We do not know, right? And given the elections, upcoming elections in India, you have to be mindful of that and keep in mind that instead of considering the super bull thing, we have to consider the cautious thing that wave 5 may be nearing its end. And if the wave 5 is nearing its end, you already know that the wave 5 has to just take out the high of wave 3. And the high of wave 3 is already taken out. So it can just give some minor leg up or even a major leg up. Who knows? 5 can also be extended, by the way. So it can go this much up and then fall, or it can go just keep going up and up and up. Both things do exist. So long story short, we need to be very mindful of our global counterparts. Like Nikkei has been giving exceptionally strong rallies, but I think it's more important to keep a watch on S&P at this point in time instead of Nikkei. It actually smashed through all our targets, literally picture perfectly. But again, we don't cover it here, so let's leave it at that. So stay mindful on Nifty. Any longs, just limit your risk limit by putting a stop loss or whatever risk management measures you are using. And as far as my analysis is concerned, as long as the market sustains above 21900, let's say, we can continue the trend intact. So that's a conservative view. Keep in mind, when the market does go below 21900, at that point it may be too late. But I will consider bearish scenarios below that level. That's the view for now. Until then, we expect the fifth to continue. Nothing much to add here. If you guys have any doubts or questions on these analysis so far, you can just post them in the comments. Otherwise, we'll move over to our last chart, and that's the chart of BTC, Bitcoin. Again, as we always do before heading over to our last chart, let's just quickly look at what we were discussing in the last webinar on BTC, and then we'll head over to the live chart here somewhere. Let me delete everything first. Let's see. Yeah, so that was our one of the two views discussed, and this view specifically was suggesting that if we see a break below this level of 6, I see I'm typing it here, so that's good. So if we see a break below 62192 on this data feed, I'll just minimize it for now. So if we see a break below this level, then we will be interested in selling shorts as per this count. Now, as it happened, it never played out. The alternate view did play out. Let's see if we are discussing the alternate view sometime soon on this chart. The alternate view is, as you can see, I'll just zoom in. This is as per the CN count. It is suggesting that this is the 1 up, this is the 2 down, and then there will be a 3 up. So that's what played out. 62192 never was touched, and I'll just quickly go over and show you on the live chart. This is the BTC chart. As you can see, the analysis lead to this alert, and this alert is still not triggered. Actually, I'll move it at a higher level at this point in time. So our bearish count never played out. And what is this market doing at this point? Now, this is interesting. We still don't have any kind of real clarity here. For all we know, this market could still be in a correction. This could still be a wave 1 down as a diagonal, and this could still be a 2 up as a correction. Because, you know, in a corrective structure, wave 2s can go to as high as 99.9% of wave 1. So basically, as long as this last high is not broken, it could still be a 2, right? So keep that in mind, that the wave 2 could still be here and this could still be like this, right? However, I'm not keeping that bias as our primary analysis. We can call this as our, let's say, H2, right? And H1 will be, let me see if we have it written on this chart or what. H1 will be that we consider that the whole correction is complete here. And this could be a series of impulse. Now, if you are not understanding what I mean by series of impulse, I'm basically suggesting the fractal nature of Elliott wave, which basically says that there will be 5 waves inside waves, 3, 5, and 1 inside an impulse. So basically, if we have a 1 up, 2 down, 3 up, 4 down, 5 up, then we can magnify the third, the fifth, and the first wave. And let's say we magnify the fifth wave, then fractal nature suggests that there will be 5 waves inside of it, which can be labeled as, let's say, Roman 1, 2, 3, 4, 5. Right. So that's exactly what I mean when I say nested. It's just the kind of terminology I use. I don't think it's a standard or anything. But anyways, long story short, BTC, I am not very clear as to what is happening. Bearish scenario obviously is reduced, and bullish scenario currently is suggesting that strong upside can be seen. But what I personally have is I also have some alternate views. I don't think we have the time enough to discuss all that. But this basically alternate view on the second chart is suggesting that this whole thing can be just sideways drama and it can just keep continuing. It can actually go and make a false break and then continue back within this range. So I don't have much of a clarity per se, right? But I did discuss all the views here. One view is suggesting upside break. Second view is suggesting no downside consideration. Only consider it if the market breaks below 62273. And last one, as you saw, it could just continue sideways. So I mean, there is no trade here or no confluence whatsoever. It's completely a wait and watch market. Only time we will have some clarity is if we see a strong bullish break, for which we have already determined the upside targets to be somewhere around 83,200 something and 91,640 something. So wait and watch completely, no action on this counter. With that being said, we don't have anything else to add. If you did like the webinar, do not forget to hit like and share the content after I close this session. And keep in mind, this webinar recording will also be all available on YouTube, of course, because we broadcasted live there, as well as my LinkedIn page, as well as on the website 50eyes.com. And lastly, if you are wondering where to get more of my updates, we do have a Slack private group. And if you are interested, you can make the inquiries by heading to the contact us page and selecting requesting details for Slack private group. Keep in mind, you do need to have basic understanding of Elliott Wave in order to become a member. And with that being said, thank you for being here till the end. I'll see you guys in the next one. Take care.